Good afternoon, and welcome to today's Devron Corporation webcast as part of the Planet Microcap Showcase. It is now my pleasure to turn the floor over to your host, David McMillan of Devron Corporation. Please go ahead.
Thank you, and thank you everybody for joining our presentation this afternoon. My name is David McMillan. I'm the President and CEO of Devron. We are a TSX venture-listed company under the ticker FARM, about a $50 million market cap in the growing agriculture technology space. We focus on two main things, which is the first, collecting data across farms across North America, both in Canada and the United States, as well as then aggregating that information and providing IP-driven algorithms that help farmers and agribusiness increase yields, reduce costs, and improve farm outcomes for their customers. I'm going to go through our presentation today, and there is a Q&A section which everybody is freely able to put in, and I'll read those out as we go if we have any at the end of my presentation. So I'll move on to our first slide here. Just a quick overview of what Devron has achieved over the last year or so. We can continue to have compounded annual revenue growth over the last 3 years of 139%. We're fully cashed up, having completed a $6 million financing at the end of December 2020. We have a really interesting, almost SaaS-like business model, which has a 90% customer retention rate, and a large shift from the core services that we used to offer to our high-margin digital insight business. In the last 11 months, we've acquired 3 companies, so we really have an acquisitive strategy along with our growing organic growth imprint. And then there's this other massive opportunity within agriculture technology that fits within ESG investing and carbon sequestration. So I think as a rounded opportunity to play agriculture technology, we offer a really interesting business model around digital services that are impacting farms across North America. So when I talk about, what are we trying to do here, and it's really, you should look at Devron as a company focused on collecting and organizing the world's agricultural data. Every day, gigabytes of information are being collected and created on farms across North America, creating this burgeoning opportunity to monetize insights, organization, and recommendations around what farmers should be doing. And as I said from the top, we do this in a couple ways. And the first is providing this network of scalable rural labor. In a sense, it's almost like an Uber for agriculture. We have teams of people across Canada and the United States that offer on-demand services to collect data on farms. And that's as simple as digging holes for soil sampling, tissue sampling in season from crops, as well as flying drones. We install weather stations. All of these are custom services that can be provided directly to the farmer, but also on behalf of some of agriculture's largest enterprises that are looking for a scalable workforce and is organized and driven by technology. On the other side, after we collect all this information, we provide digital insights on how to make this data valuable. And so whether it's analysis and interpretation of how better to drive decisions on the farm, whether it's to help a farmer decide how much fertilizer to use, what amount of chemical to use, or what seed to use. And then, as I mentioned, generally organizing this information, which creates a large database of data, which becomes a sticky revenue source as over time, people subscribe to have access to this information in a nice organized way. So over the years, we've been really focused on one thing, and it's growing our acres under management. I think it's the best way as an investor to provide a barometer to what Devron does and how we're growing. And we do this sort of in 3 ways in creating additional value of the acre. So one is we have a sales team that's based in Kansas City, Missouri, that is constantly interacting with more and more people offering our products and services. The other is we've been increasing our acres under management through acquisition. So as I mentioned at the beginning of the presentation, we've acquired 3 companies over the last 11 months. Agriculture feels like today where probably healthcare was 10 years ago. Private equity hasn't quite figured out the roll-up strategy of many of these independent ag services businesses. Multiples are very low. You'd see, our last acquisition, we acquired a company for 2.2 times EBITDA. So we think there's a huge opportunity to roll in smaller owner-operator businesses to our growing platform and use technology to keep growing these businesses. And then ultimately, as we've done over the last 3 years, we've continued to introduce new products and services that our joint customers are able to then purchase growing our average revenue per acre. So as you can think about it today, every new farmer that we bring into our business is then going to have an opportunity to buy more products and services from us, creating additional value over the lifetime of that customer and opportunity to create cash flow from each product we sell. To walk you through a little bit of how this customer journey sort of happens is you generally get on farms across the United States and Canada doing the work that nobody else wants to do. This is where we joke about picking rocks, but also in collecting soil sampling and doing all sorts of this data collection work, which starts to look at like a $7 revenue per acre type of opportunity. And then as we get to know these customers and they start to ask questions around, well, what can I do with this data? Through our platform, they're able to order analytics and customization for those, the data that they're being collected on. And then we have lots of customers today that go into this full farm management opportunity where not only are we collecting data on an annual basis for them, but we're also interpreting almost every decision that they make. And it's a really powerful metric of growing value for the farm and increasing, their yield, decreasing their costs, and improving farm outcomes. And when you think about the margin profile of these services and technology solutions, it's as you would imagine. When we are going out to farms in a heavy-handed analog lift of people, our margins are roughly 60%. But then as we start to push people towards our digital insights, you start to see an improvement in our margin to now where we are. If a customer is sort of using our services and products across the landscape, we have an 80% gross margin, typical of many technology companies. And so how has this strategy been working, and where have we been going? So over the last 3 or 4 years, we've started to really see exponential growth. In 2020, we ended the year with just under $3 million in top-line sales. Up to date, we've announced a number of new acquisitions, plus new contracts that we've signed that puts the company already at 5.5, just under $6 million Canadian run rate. And you can see on the other line that our acres under management are starting to explode. So last year we finished at just over 500,000 acres, and already this year we touched 3 million. And part of that has come through our acquisition strategy, which I'll walk through, and our new digital platform called FarmDog. So FarmDog is a software company that we purchased out of Los Angeles, built by a genius founder, Laurent Bruch, who's joined us as our VP of Product and Sustainability. FarmDog is really a mobile gateway to agriculture digitization. It's a mobile-first app that also has a web-based platform that provides scalable opportunity for ingesting data on farms across the world, as well as providing a scalable technology around insights that allows people in agriculture to compare quickly different types of experiences that are being found across their farms uniquely. And just to look through a bit of the user base of FarmDog and why we're so excited about it, is the main point is we've acquired 4,000 new active users and 2 million acres under management. It's been an award-winning app for one of the best applications to use in agriculture for a number of years. And I think what's truly exciting about it for us is that because Deveron has a number of monetizable products and services, when you think about our average revenue per acre opportunity, even starting to monetize 10% of the acres that FarmDog has under management leads to an incredible opportunity to grow our run rate. Not to mention, on top of it, it becomes a central place for us to standardize data, communication, and really drive a customer platform experience that gives Deveron a true technology lens or wrapper as we move forward and consolidate more and more of these businesses. From a management side, we've got a great team of people that have spent a lot of years and experience in agriculture. From my end, I've spent most of my time in Canadian public markets helping high-growth companies raise capital. Scott Jackman, our VP of Sales, is based in Kansas City, Missouri, having spent 6 or 7 tours in Iraq, Afghanistan. Laurent Bruch, who I mentioned, is our VP of Product, is ex-McKinsey, NYU law grad. Mike Wilson and Aaron Breimer, both based up here in Canada, have spent over 30 years selling fertilizer to large farmers and realizing this opportunity of using data to drive decision making. And recently we brought in Craig Hoken, our VP of Finance, who has experience consolidating large companies in the healthcare and technology space, as well as previously roles at Celestica. So we think we've got a great team, and then we've also got a great board led by Bill Linton, who for some of you in the United States and most in Canada will know the company Rogers Communication, our largest cable company. So Bill was the chief financial officer of Rogers for a whole bunch of years, and now sits on a number of very prominent boards here in Canada. He and his group invested last year, and Bill joined as chairman, which has really been helping push us towards a technology company and productizing our experiences. We also have Roger Dent, who's been a very successful investor in small cap technology here in Canada to help guide our oversight as we move towards our technology prospects. So I mentioned a little bit of our financial history, but here in the chart you can see a sort of year-over-year revenue rate, and then with our high margin of, our high retention rate and increase in new acquisitions that we've announced this year, you can see already that we're on a great improvement in 2021. We're fully cashed up, so we've got lots of other opportunities on the acquisition front, which we believe are going to continue to be accretive. And I think the other thing to point out is, although originally started as a Canadian company, we now are starting to see almost a 50-50 split this year in Canadian-U.S. revenue. So I think, for American investors, this is another great opportunity of how to play agriculture technology in the U.S. market. So we're excited about continued ramp up of revenue, continued ramp up of our acres under management, and we think that this is a really great year for Deveron to explode as we figured out our value proposition for our customers. Finally, I'll just touch on the cap table. So from a perspective of where we are today, we've got about 68 million shares out, 5.5 million warrants and options, and 15 million warrants, all of which are currently in the money. We have a large holding from insiders and a merchant bank partner of ours. And then, as a smaller Canadian company in our earlier history, retail has sort of helped build our balance sheet. And a lot of that, though, is also selectively held in a couple key individuals who've been shareholders in the company from the early days. So we've got a great breakthrough of investors. And as I say, we're just looking forward to exposing agriculture technology to more and more investors. There's been probably over the years about $45 billion of Silicon Valley money that's gone into companies privately. And we're just starting to see, I think, through SPACs in the U.S. in the vertical farming space, through recent IPOs in Canada, Farmers Edge, which was a $150 million offering and now has an $800 million market cap, as well as what larger companies like TELUS Agriculture are doing, that the space is becoming known in the public sphere, and we're excited to keep executing on our vision, which should help over the coming months. So with that, I will check into the Q&A, and if anyone has any questions to our presentation, I encourage you to put them into the Q&A, and I'll wait to see if we get any questions. My contact information is here, as well as our director of growth. If any of you wanted to reach out after, if you weren't able to book a one-on-one meeting with myself, we're pretty free over the next couple of weeks to encourage anyone to meet with us. So the first question we have here, I'll read out, is, can you comment on how big the ag tech opportunity is in North America? What are some comps and how are they valued? So I think, as I alluded to at the end of our presentation, agriculture technology has been this largely financed in the private VC world out of Silicon Valley for the last 4 or 5 years. And we're really starting to see the opportunity publicly. When I think about, as a data business, where we can go, I look at the market size in North America, which is roughly 1 billion acres of cropland under management, and that's billion with a B, as in banana. And you think of the potential to digitize all these acres, considering how early farms are in their digitization strategy, and it really is quite massive. We started this company with myself and one co-founder with no acres under management, and today we touch 3.2 million. Now, not all are uniquely paid, but if you start thinking about the opportunity around total addressable market, and the fact that today farmers in North America on average spend $400 to $450 an acre on operating costs, and very, very few dollars of that are digital. Whereas in most businesses, you would have a large spend towards digital benchmarking and analytics that things are going right. we think it's easily a $20 an acre market, and we see the ability, one day, given that we're already at 3.5 million acres under management, to be, 5 million unique acres that are fully paid. So I think when we think about how big the opportunity is and where we want to go, it's obviously massive. You need corn and soy to grow to supply food in this country and in the United States. And then from a comp perspective, like I said, I think there's not a lot of public ways to play this early on. Obviously, Farmers Edge has about an $800 million market cap in Canada, and there's been a number of SPACs that have come forward, I think even pre-revenue, on the $1 billion side in the vertical agriculture space. So I think there's a lot of upside ahead, and it kind of depends on the focus, but a lot of companies are really, I think, valued under their acres under management, especially on the digital side. And even in the private world, it's sort of like once you can get to 1 million acres, you're relevant. And then the question is, can you get to 5? Can you get to 10? And may you be able to get to 20 or 30 million, which is where Farmers Edge is today. So I think we've got a lot of great strategy, especially around the consolidation of smaller cash flow positive businesses where we can put our technology stack on top of to really drive forward. And we're looking forward to executing on that side as well. So with that, we'll just give it one more minute to see if there's any other questions. And I think that's maybe it for now. So as I say, I encourage everybody to reach out if they have anything else. Oh, sorry, I found another button. So there's a few more questions. I'll go through here. This is, can you go through acquisition model financials and why it's accretive? So basically, if you look at all the acquisitions we've made to date, we've paid roughly 1x revenue and anywhere from about 2 to 3 times EBITDA for the companies we've purchased. When you think about even our experience in Texas, where we bought an agronomy company last year, by coming in and helping their founders use our products and services, as well as integrating their data into our back end, we've already tripled the profit of that company in short of a year. And the other thing that's really accretive is, like, we're buying these businesses not just for the multiple bump. We're buying them because our technology frees up the time for the owners to then go take on new customers. So we're improving the profitability, but we're also able to drive growth, which for me is how all of these things become accretive. And we think at the end of the day that, as we've seen in healthcare and every other industry that's gone through these great consolidations, there's probably 15,000 of these sort of small owner-operator businesses in the United States that are doing anywhere from $1 million to $5 million in revenue. And all of these businesses for us also open up market share to customers in Idaho or Iowa or Illinois that typically would be really hard for us to get onto farms in a slow period of time. So not only are we buying the business and rolling them into the pubco and giving forecastable growth, we're also getting, market share, and we're getting trusted relationships that are able to, again, implement our technology and our products and services, which are going to continue to lead into growth. So I hope that answers that question. The next one here we have is, how much capital do you have left for future acquisitions? So I think I mentioned that we've got about $4.2 million or so on the balance sheet as of today. We just spent $1.5 million on our last acquisition, which we acquired a $1.9 million USD revenue company with about $900,000 in EBITDA. That's a beautiful lab business out of the Northeast United States and Maine. It helps us kind of vertically integrate the soil business, which we're already providing a lot of value on the collection side. And, this is giving us the chance to almost double our revenue on the analytical testing side. So we have lots of, powder left, and we're, as I say, we've built up this database of probably 70 companies where we've met with owners and operators from, and it's why we raised the amount of money that we did in December. One more question here. It looks like, how many private agronomist practices are there, and what's your payback in weeding out the viable ones to acquire? So I don't know the specific number. I can give 2 talking points to it. Like, in our overview of the independent agriculture services market, there's sort of 15,000 businesses. I'd say probably a good half of them would be CCA, which is the independent crop consultant designation in the United States and Canada. So let's say about half of those businesses are independent guys. And in terms of weeding them out, there's a little bit of a process that we're still trying to figure out how to scale. I mean, there's a lot of just meeting with these people and getting to know if they're influential in their local markets and what kind of brand they have. So in that sense, it's a little bit of like actually getting our fingernails dirty and getting to meet people. What's been interesting is that if we've been overviewing the market, there's another step up where there's kind of these organized firms that might be doing 5 to 15 million, and they're either vertically or horizontally integrated on a couple product offerings, but they're private. So I think that's where we can also see this stepping up to after we've acquired a number of these kind of independent consultants that have local representation. There's this next level of the market where you have almost like an agronomy services business that provides soil testing and crop consulting maybe across 2 states. And these guys would be a little bit larger. So I think in terms of weeding out, we're just trying to find a few good people, and we don't actually have to find 100 million of them. We've got to find 15 to 100 really great businesses over the next 2 or 3 years, and that's also going to give us scale in the business where potentially we could go look at some of these more organized entities to acquire. So I hope that answers that question. I believe we're still getting a few more as I learn the system. I guess I'll let the operator cut me off. But the next question we have here is, how do you think about growth versus profitability? Also at higher revenue, what does EBITDA margin look like? So I think, I look at agriculture today as a bit of a land grab. You've got the have companies that are sort of monopoly hegemons of the Bunge's and Bayers of the world that have been trying to sell product forever. And I think there is this amazing transformation happening in agriculture where data is really going to be the driver of future returns. And, with that, we're trying to get as many customers as we can. Now, over the last couple of years, we've been, I'd say, had a fair amount of fiduciary responsibility in that we know that we can make money with our business model because we're doing it in certain nodes where we've been established. So I think for us, it's more reinvesting the positive growth that we see in areas once we hit that capacity to get into new states. So, last year we were very prevalent in Missouri, Illinois, and Iowa, whereas this year we're sort of at 7 or 8 states. So we're really focused on growth. With our acquisition of FarmDog, we're also really focused on investing in our technology platform. So although profitability is there, it's not the immediate focus as we try to ramp up and get to this goal of 5 million acres under management. From a perspective of modeling, I think, we do have a really high margin, high gross margin business. Typical technology companies, you might see EBITDA margin of 20 or 30, and I think that's in sight given the data that we have. And also the thing to think about is every customer that we work with today, as we aggregate and store their data, we're creating a data lake. And as that gets larger and larger and more valuable around temporal historical ability, I think the value of that data set in itself to be able to sell as a product to people interested in aggregate analytics in the agriculture space becomes a really attractive asset as well, which would lead to very high EBITDA margin. So I think that's one of the things that we keep working on, and I think that's what makes our digital business very attractive. Another question here. My neighbor, one of the last large farmers in Markham, has a son with a post-grad ag degree. Are you looking for someone best and brightest? So I'll just say we always are looking for great people, and thanks for asking that. I've got an email here, and I'll email you separately. So I think that is actually it. Looks like we've answered everything. I think that's within the time limit of the presentation. So with that, I think I'll end my presentation. Thank you so much to everyone that participated today. Thank you for taking time to learn about Devron. Agriculture technology is a very exciting space that I think is just starting to come to the public market. So there's not really many ways for investors to play it. Again, we trade on the Toronto Venture Exchange under the ticker FARM, and you can feel free to email or call, and I'd be happy to answer any other questions about the space and share any files for those new to ag tech of relevant reading and things that we're looking at in terms of opportunities. So thank you very much, and have a great rest of the conference.
Thank you. This does conclude today's webcast. Thank you for your participation and have a wonderful day.